full first month of 2025, we can anticipate that a lot of the measures that you're going to see play out, possibly in the budget, could bring some respite. At least that's what the street is hoping for. But the data, in fact, suggests otherwise. Somit is joining in with the numbers that you should take into account ahead of the start of February. Somit, you've looked at the last 10 years, and what is that data pointing to?
Well, nothing positive if you look at the data. In fact, now with January coming to an end, and this could be the fourth consecutive month of decline that we could see by the end of January. It is important to gauge what February has in store for investors. Now, we looked into the data for the last 10 years, and what you understand here is that the Nifty 50 index, which is the benchmark index, has declined nearly 6 out of the last 10 Februaries, and the average return have been negative around 1.2%. The Nifty mid-cap index has declined around 8 times out of the last 10 Febs, and the average return has been negative 1%, while when it comes to the Nifty small cap index, it has declined nearly 7 out of the last 10 times, and the average return has been negative 2.3%. Now, if you look at the sectoral indices, there it's the media and the FMCG index which have declined the most, nearly 8 times out of the last 10 years, and the average return have been anywhere between -2 to -4%. When it comes to the financial sectoral indices, which is the Nifty bank index, Nifty PSU bank, Nifty financials, and Nifty private bank index, all these indices have declined nearly 7 times, and the average return has been anywhere between -1 to -3%. When it comes to Nifty IT, auto, metal, energy, pharma, MNC index, all these indices have declined at least 6 times in the last 10 years, and average returns have been as negative as -3%. Now, when it comes to Nifty real estate and the Nifty CPSE, which is the PSU index, only these two indices have declined just 5 times, and the negative returns have been around -1% for these two sector indices. Now comes the most important part, that is the stock related part. In that, if you look at, this is the stocks that have given a positive return seasonally in the month of February. Now, these stocks have closed in green at least 7 times in the last 10 Febs, and the average returns have been more than 3%. For Trend, if you look at the average return, it has been around 8%. Apart from that, if you look at stocks like Avenue Supermarts, Chola Finance, they have given a return of nearly 5 to 7%. Polycab has also given an average return of 5% in the month of February, and then there is India Mart, Coal India, and JK Cement, which have given a return of nearly 3 to 4%. Now, on the flip side, if you look at these stocks have fallen at least 8 out of the last 10 Februaries, and the average returns have been as negative as at least 4% in the month of Feb. IRB in fact tops the list here with a negative return of average negative return of 7%. Then there is BHL, Bank of India, and CAC, which have given a negative return of around 5 to 6%, followed by Aurobindo, United Breweries, CG Consumer, and PVR Inox, which have declined anywhere between -4 to -5% in the month of February. But do remember that January will be the fourth consecutive month of a decline, so the setup is completely different for February this time compared to what we have seen previous years.
First time since 2002, was it 2002? Was the last time you saw 4 months in a row of declines for the benchmark?